Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update for Monday, October 17th through Friday, October 21st, 2011 is sponsored by Realtik. Alright guys, let's get right into the mix. I'm zooming out on the chart here to show you on an intraday basis where the market was and where it is now. This is one of the most tremendous, largest rallies we have seen in the market in recent history in terms of such a short span. Yeah, the market's been up more, but in such a short span of 1.5 weeks, it's very rare to see a gain of 14%. That's right, folks, 14%. But the market continues to go higher. It's not surprising to see last week's rally in terms of prior to the latest week. If you go back about 2 weeks from that Tuesday pivot low on October 4th to really that Friday, this move up here, that's not surprising. Even early last week is not surprising because you had the bond market closed last Monday for the Columbus holiday. But to see the market continue to stretch the gains Thursday and Friday, that is tremendous. And again, 14%, I repeat, in just a week and a half. Now, will it last? That's the big question. And again, the crazy thing about this is as we look at the pivot low down here on the SPY, which mirrors the S&P 500 at 107.50 and the current level of 122.50, is more so the fact that there's nothing in stone. And again, this brings in many conspiracy theories out there. I've heard it all from banks in France having to sell assets which are in U.S. dollars, which drive the U.S. dollar down to raise capital for themselves. And again, there's a lot of misconceptions and rumors out there, some which may be true and some which obviously are not. But bottom line is, the media has blamed this rally on the fact that the global forces in Europe are putting together a recapitalization plan. And the fact is, there's nothing in stone. Yeah, we hear it all. We've heard it all every day. A month ago, we heard about the possibility of a bailout for Greece and Italy, and we've heard about recapitalization plans. But it never took hold until the volume last week really died out. And once that volume disintegrated last week, POMO comes in, the Federal Reserve and their new twist program. POMO comes in, propels the markets up, and before you know it, you have a 14% gain very, very quickly. Now, again, will it last? Well, the fact of the matter is they could extend it a little while longer, but chances are you won't continue at this rapid pace of upside. By this rate, we should be up 21% by next Friday. I don't think that's going to happen, frankly. If that happens, then we're almost back to the 52-week highs in the market. But again, as we zoom in, I want to just talk a little bit about last Friday's action. Here's Friday's action, folks. And looking at last Friday's action, it does not take a genius at a certain turn in the markets to see that they were going to kind of prop the market up on Friday, close it near its highs. And you might say, well, how do you know that? Simply just by reading the charts. And again, folks, if you want to get more involved in the methodology here that we've created, which is, again, a winning methodology where we angle for that 80 to 90% success rate on all trades, that means 8 out of every 10, 9 out of every 10 trades are going to be successful winners, then you need to join here. There's a free trial we offer at InTheMoneyStocks.com. I repeat, 7-day free trial. You try it out. You see if it works for you. If it doesn't, you leave. If it does, you stay. A lot of people come here in that initial week. They'll make enough to pay for months, if not years, of the service just in that one free week. So again, you got to learn the methodology. You learn the methodology, you profit for life. That's simple. In any case, the market was interesting for a couple reasons on Friday, even though the volume was dead. It was dead volume all week. But notice the gap up on Friday took us right to the pivot high here. And again, once we hit that high, the market started to sell off. And the markets were selling off in that early morning session when volume was actually decent. But on a Friday where the volume the whole week has been dead, you have to assume volume is going to continue to be very dry on Friday going into a weekend. And that's exactly what happened. So as you fell down here, you came right to the 20 moving average, and volume by this point into 11:30 was just dead. You can see how little the candles are down here. And what ended up happening is you started to create an in spirit of bear flag pattern. And again, these are patterns that you must know if you're going to tell the future of the charts. And as the market started to break down and have that in spirit of bear flag pattern play out, you essentially saw no volume behind it. That means it's very easy for propping to come in, and lack of conviction is notorious in light volume. So the volume all of a sudden dries up. Markets cannot continue to play out the bear flag pattern, which would have sent the markets probably down to this support right down here. That fails. And again, one thing to note, which members know here at In the Money Stocks, there was no confirmation. Confirmation is a key signal we've created to tell us when a breakdown is true or not. In any case, there's no confirmation, and essentially the bear flag fails. And once a bear flag fails, just like any pattern failure, the reverse move is going to be pretty serious to the opposite direction. And in this case, you fail to break down, therefore you have to anticipate the markets going up. The markets go up, they recapitalize and reconfirm above the 20 moving average, and then the rest of the day you just figure is going to float up. Now, interestingly enough, as we get towards the end of the day, you have this nice topping tail here, and many people would say, oh, it looks like the market may be finally putting in a top. Not that way, at least not based on this little tail pattern, topping tail. The reason is because they sold it off and then just rallied it and squeezed the shorts into the close. A lot of shorts were hoping for a bigger sell-off here. It didn't happen. They had to exit their short positions, and then ultimately the market's all the way to the upside, shot higher. All right, so there you go. That's your Friday analysis. Very, very interesting week. And again, you could see the conviction was definitely towards the upside. Because even on Thursday, when we had that nice little sell-off where we opened sharply lower and we sold into this pivot low, you couldn't break through this level. This level right here, which we obviously see as a major level, the markets just couldn't do it. And by the end of the day, the markets essentially closed flat. And that we haven't seen in quite some time. If you go back 3 weeks, 4 weeks, 5 weeks, 6 weeks, it was always the opposite. It was the conviction to the upside was not there. The markets were always breaking down. So you have seen this shift, of pretty dramatic shift. And again, you have to wonder now if this, pseudo QE3 is having an impact, especially with the light volume last week, if there really is a change in sentiment or if there's some other kind of underlying situation going on here. And again, could that be why the markets have extended themselves to such a degree? To see a pop off that low pivot of recapture, and if I go to the daily chart, I'll explain a little bit more. Here you had the market breakdown. And again, the market closed below this pivot low on this specific day on October 3rd, but there was no confirmation. Again, this is going back to a key technical thing that we've created, proprietary signal. No confirmation. So we kind of were sitting on guard here. In fact, I closed out most of my shorts right down here at this pivot low the next day without that confirmation. And again, we ripped higher. Without confirmation and you closing back above, recapturing that level, it's telling you you're going to go higher. Now, again, a 3-bar surge is usually what you get off that move into the 20 moving average, into the 50 moving average. This chart, again, look at the volume as it dies out down here. It just blasted right through. So, I mean, you just blew right through these levels. The 50 move, the 20 here didn't even stop this thing. You got a little bit of a pause day there after a 3-bar surge, which again, to see a pause day, all right, one thing, but it just recapitalized to the upside, bursting higher, blew away the 50. Then you had another trend line right here, which I think is even impressive to talk about. You can talk about this little line right here. You come up to it, you kiss it, you just blow right through that as well. And again, that's partially, obviously, the fact that you had a fair amount of shorts on board here, a lot of bearish sentiment, which again can be read as a contrarian indicator, but also the fact that you just had the volume drying up. And again, anytime you see volume get lighter, folks, you have to be on watch. And, again, looking to short the market, looking to see the market here. And, in fact, I actually got stopped out myself of a 2 shorts on Friday, which I just had to say, all right, it's not going to work out. You have to recognize that, and you have to step aside. But in any case, this market move up, you have to look at those other factors. And there's been talk, again, that these banks in France especially have had to sell major assets, which is actually creating a false rally as the dollar has been punished. And the dollar's been punished in a huge way. I mean, unbelievable way. Let's take a look at the UUP on the daily chart. The dollar fall here from this pivot high has taken it all the way back down. I mean, look at the fall in the dollar from 2260 on the UUP, which mirrors the S&P, mirrors the dollar index, but all the way down from 2260 down to about 2160. So you're talking about almost a 5% drop in the dollar, that's a big drop. In any currency, that's a monumental drop. And yes, it's coming off of a big move up, but you are now at support on the dollar. And if you break this support at the 50 moving average, your next major spot would be right here, which is at 2140. So there's not a lot of downside. Yes, you probably hold this level, but even on the off chance that the dollar does go lower, which personally at this point I'm okay with, I would like to reload on a couple shorts up there as the market goes in the opposite direction of the dollar. But even if it comes back here, it's only about 25 cents lower on UUP. During the week we dropped multiple times that much easily in just one day. So again, right here between these two levels, you really want to start paying attention to the market, as this should be your ultimate level. And again, it's hard for me to even see the dollar getting through the 50 moving average, but if these shenanigans with light volume continue on Monday, yeah, it's a possibility, of course. The light volume, remember, favors the upside, and obviously if the banks in Europe continue to recapitalize themselves by selling dollar assets, then that's going to drive the dollar lower, euro is going to go up, and the markets go the opposite way of the dollar. It's just a standard thing you must know. And we're trading currencies. I mean, when you trade stocks, folks, if you're trading indexes like the S&P or the NASDAQ or whatever, you're essentially trading currencies because anytime the dollar downticks, the markets will uptick. It's just an inverse relationship, and that's why the markets up until a week and a half ago were getting pounded because the dollar was going up. Now the dollar's collapsed back down, and what have we seen? We've seen a huge monster rally on the SPY or on the S&P 500 of about 14%. 14%, folks, in a week and a half. Looking back in history, yeah, you've seen that a couple times with the craziness of the 2008 2009 period, but that was when we were much lower on the charts. When the S&P was 700, 800, whatever it may be. You're a lot higher now. Very rare to see that type of move. Unbelievably rare. And it does tell us that again, chances are there's lack of institutional selling, which is partially why the volume was so light. But with lack of institutional selling, if the POMO comes in from the Federal Reserve, which is on this new twist, whatever the hell they call this, this twist policy, twist move, that comes in, very easily it can lift up the markets. And again, the selling will ultimately come back in. It's just a matter of when, and that's our job here to kind of figure that out, put ourselves in a position, keep that winning percentage at 80 to 90% success rate, and then go from there. All right, so that's what we're going to do here and continue to look at that. And again, sign up for the free trial. Try it out. We do live broadcasts in the Research Center. You can do the No Hype Live, which, by the way, Sunday night, No Hype Live. I'll be taking questions, live charts, and market analysis, trade setups, you name it. We're going to do that Sunday night. Going into Monday, obviously, every day we do a nightly video in the Research Center for our members. You have hot charts and alerts with key swing trades that we're personally taking, setups, market analysis, and educational stuff posted, as well as daily market reports. Everything else that you could imagine is in there. Plus, once you become a full-fledged member, you get access to Traders Life 24/7, which is the best social network for just traders out there. It's kept to just traders of in-the-money stocks because they're the ones that know the market. They're the ones that know the methodology. They're the ones that are continuing to profit based on the rules here, and they know how to teach it. They know how to help each other, and it's just an amazing profiting arena for amazing traders, frankly. And again, we've personally trained a bunch of them out there, and a bunch have just followed us and learned over the course of the year and years, and are now some of the best traders. In fact, I believe the traders of Traders Life 24/7 rival Goldman Sachs and all the hedge funds out there as being the best. In fact, I believe they're better. All right. So again, we encourage you to come here and join this free trial of the Research Center. And if you're into trading a little bit more actively and you want to get intraday analysis, then come join the Intraday Stock Chat 7-day free trial as well. Going back to the SPY, folks, again, this is the daily chart. Your resistance levels, your next resistance on the SPY is this pivot high right here at 123.50. Remember, the SPY follows the S&P 500. So it's the ETF that tracks the S&P 500. So first resistance, 123.50. Second resistance is more of a minor one at 124.45. And then you have a good level right up here as well. My guess is, again, I'd be hard-pressed to think that the markets could get through 123.50. But then again, I didn't necessarily think they'd get up 14% either in just a week and a half, although no one else out there did think that as well. So again, it's a matter of looking for where the market puts in a little pivot top here. Do we get another doji? Do we get a topping tail? I mean, what's going to happen? We're going to be reading those charts on a live basis to our Research Center members, giving them the heads up, and again, ultimately profiting from this market whenever it does give us a swing to the downside. All right, have a great afternoon, great weekend as always, folks, and here at In the Money Stocks, we're going to be continuing to make money next week. Take care, come join the best, trade with the best, profit with the pros, inthemoneystocks.com.